Good morning. Welcome to the press conference following the meeting of the Ministers of Finance and Economy, also known as ECOFIN. We have Minister of Finance of Portugal, João Leão, in Lisbon, and I have Commissioner Valdis Dombrovskis here with me in the podium. We will start with a statement from the Minister, followed by a statement from the Commissioner, after which I will open the floor to questions. Minister João Leão, you have the floor.
Boa tarde, good afternoon. Thank you for joining us today. I also greet Vice President Dombrovskis present in this virtual press conference. We just had our second ECOFIN meeting under the Portuguese presidency. We had a very good and comprehensive discussion on the economic recovery in the European Union. On this issue, we focus our discussion around 4 items. First, the economic situation and outlook in Europe. Second, the implementation of the RRF. Third, the SURE program. And finally, the financing of the next generation EU. On the economic outlook, the European Commission commented on their winter forecasts published last week. Let me share a few words on this. Vaccination campaigns are in progress, and in following months, we'll be able to gradually lift restrictions, providing further breathing space to our economies. All forecasts are currently subject to high uncertainty, but we expect our economies will start to show signs of strong recovery between the second and third quarter of this year. We'll continue to monitor the evolution of the situation and adopt policy responses as needed. We must also stay vigilant, as the speed of the recovery is uneven across sectors and countries. We must also avoid removing support measures of the economy too early. Our meeting today also benefits from a presentation by the European Central Bank, as we intend to monitor closely financial stability-related issues. All efforts must be put into maintaining a virtuous cycle between sovereigns, banks, and corporates. We then move to the state of play of the RRF, our key instrument to reboot our economies. The publication of the RRF regulation in the official journal will take place this Thursday. This means that by the end of this week, national recovery and resilience plans can be formally submitted. I recall my colleagues of the importance to finalize the recovery and resilience plans in an efficient and true manner, to allow for a positive assessment and rapid disbursement of much-needed funds. We all agree there is a lot of work ahead of us to facilitate such a process and ensure a constructive and positive dialogue. Yet, we are fully aware of the importance of such instruments and that timing will also be crucial. As the motto of our presidency says, it's now time to deliver. We want to deliver plans that will help citizens and business exit this crisis, plans that help the European Union achieve its target of climate neutrality by 2050, plans that set our economies on a path of digital transition, and plans that will make Europe more resilient. Before we can use this instrument, all member states must ratify the onerous decision that was adopted by the Council last December. The Portuguese presidency has been following closely this matter. 6 countries have already finalized the ratification. We are confident that most other member states are doing their best to do so until March, so that this process can be completed by April. Under the SURE agenda item, the Commission updated us on the issuance of bonds under the SURE instrument to help member states finance measures that safeguard employment during this crisis. Ministers were very glad to note that the SURE bonds have seen great popularity among investors. This gives us optimism for similar EU financing operations in the future. This brings me to another important discussion in today's meeting, the strategy to finance in the EU markets the next generation EU. We welcome the Commission goal of having 30% of the next generation EU investments funded by the green bonds. This, together with the issuance of social bonds under the SURE program, represents a clear sign of commitment to align these funds with our aim of a greener and more social Europe. The last topic I want to mention today concerns the EU Global Recovery Initiative. The pandemic has raised the issue of how developing and low-income countries can finance their recovery. We have important international discussions on these issues in the next months, the G20 and the IMF spring meetings in April, and the summit on financing African economies organized by President Macron in May. We have started the discussions on how to ensure that EU provides a strong and coordinated action to help low-income countries in need in the best possible way. In the context of efforts to support developing countries and their recovery, allow me to highlight that the Portuguese presidency will be hosting the EU-Africa Green Investment High-Level Forum in April, together with the European Investment Bank. Thank you for your attention.
Thank you, Minister. I will now give the floor to Vice President Dombrovskis.
Thank you, Mr. Minister. Good afternoon, everyone. Our discussions today focused on Europe's overall response to support the recovery and the implementation of the Recovery and Resilience Facility. As Minister already said, it will enter into force in a few days' time. While the pandemic continues to determine our outlook, the Commission's latest forecast shows that at last we are turning the corner in overcoming the economic crisis. It is still subject to high uncertainty and downside risks. Nonetheless, there are grounds for cautious optimism. Growth should resume in spring and gather momentum as vaccination campaigns advance, pressure on health systems start to subside, and containment measures ease. The EU economy should return to pre-pandemic GDP levels in 2022, earlier than previously forecast. In the meantime, we still have to contain the socio-economic fallout. This is no easy task, but this is where the Next Generation EU Recovery Package and its centrepiece, Recovery and Resilience Facility, will give further support, provided that its funds are well spent and go hand in hand with effective reforms. It opens up a unique chance to ensure a sustainable and inclusive recovery, so that Europe emerges more resilient from the crisis and better prepared for a green and digital future. The money needs to start to flow as soon as possible. The EU governments are now working to prepare their recovery and resilience plans and submit them to the Commission for assessment. With the regulation now approved, they can do so as of Friday. These national plans must address all or significant subset of challenges in the country-specific recommendations. They should set out how each country will contribute to the green and digital transitions, and they should strike a proper balance between reforms and investments. In parallel, the Commission is working hard to put all elements in place for the finalizing operations of Next Generation EU. This will be done through market funding of up to 750 billion euros in 2018 prices, or some 800 billion euros in current prices. This will make the Commission one of the biggest euro-denominated issuers on the level with the largest sovereigns. Commissioner Hahn informed ministers today about options we are considering to address the various aspects of this complex borrowing exercise. We expect to start borrowing the first issues under the Next Generation EU already this summer. However, this depends on all member states ratifying their own resources decision. 6 EU countries have already done so, and many are advanced in the process. I call on the remaining countries to ratify their own resources decision quickly, so that the Commission can start its borrowing program under the Next Generation EU. Ladies and gentlemen, the pandemic and its impact affect the whole world. We can only overcome it if all countries have enough capacity to do so. This is why ministers discussed today how to support the world's poorest countries, many of which are at high risk or in debt distress. We considered various actions in the context of our Global Recovery Initiative and within the context of the G20. These include extending the Debt Service Suspension Initiative, which the EU promotes in the G20 as a major achievement of multilateralism. Another idea is to support a new general allocation of IMF special drawing rights to help provide much-needed liquidity for low-income countries. This would first have to be subject to a thorough analysis by the IMF. We also looked at the ways how low-income countries can enhance their capacity in tax policy and tax administration. Thank you, and I'm open for your questions and comments.
Thank you, Vice President. Indeed, we'll now open the floor to questions. As a reminder, please state who you are addressing your question to. Don't forget to turn on your camera and your mic. Tell us your name and which media you work for. So I'll give the first question to Matt Thompson from Law 360. Matt?
Hi, thank you. This is to either party, so whoever feels more capable of answering it. So it's been reported that on the agenda today, the Dutch have raised the issue of the American tax law FATCA, which requires banks to report US overseas citizens' holdings. Basically, so the issue was meant to be a lack of reciprocity and accidental Americans being refused bank accounts in Europe. Could you update us on where the discussion went and what the outcome of this was? And just a second quick question is, the EU's tax haven blacklist was meant to be updated today, but it's been moved off the agenda and into a less open forum at COREPER tomorrow. Is this to do with sensitive discussions about Turkey? Could you please explain the change of venue? Thank you.
Thank you. Sorry, Matt, can you just repeat your last question?
Yeah, sorry about that. The EU tax haven blacklist was meant to be on the agenda today and it was moved off at the last minute. It's been given to COREPER tomorrow, which is a less open forum, at least to journalists anyway. Is this to do with discussions about scheduling Turkey? Or could you just give me an idea of why the forum has been changed?
Thank you. Minister?
The list is an important part of the EU commitment to strengthening the tax good governance and global tax transparency. As far as your question that regarding the lists, the EU member states were able to agree on an update of these lists, and so we have settled on a new list that can be approved by all member states. I didn't get properly of your question about COREPER, but I guess.
Yes.
You've answered.
I guess the Commissioner can.
Yes, Commissioner, you can complete the answer, please.
Actually, I wanted to come in concerning the first question on FATCA, because indeed there was a debate concerning the exchange of information between the EU and the United States under the Foreign Account Tax Compliance Act. This issue has been addressed also informally with the US authorities by members of the European Commission and Commission services on several occasions. This is a long-standing issue, concerning also so-called accidental Americans, touching many areas, including the reciprocity of the scope of data exchange, data protection, and banking. FATCA's impact on individuals and financial institutions and the lack of full reciprocity and loopholes in the data protection of EU citizens were always among issues raised by the Commission. And during those discussions, the Commission always stressed the need for the US to address these issues as soon as possible. So we hope to be able to discuss them soon with the new Biden administration. Thank you.
Thank you. Next question to Susanna Fresh, please. Susanna.
Thank you. Susana Flechas, SIC Expresso Portugal. Minister, I would like to ask if you have, ministers had a discussion on the amount of loans and grants that they will actually be using from the RRF. Did you go into that discussion? And I asked you this also in January, if you had any idea when countries like the Netherlands or Germany are going to finalize the ratification of own resources decision. And for Vice President, I would like to ask you also regarding loans, can you clarify if is there a way to exclude the amount of loans taken from the RRF from the debt burden? Is there a way to exclude it, or there's no way? And if a country is taking a loan, it's going to count also for the national debt. And how do you also expect the countries to use the loan? Because we see that, for instance, in the first draft, the Portuguese draft, the government was expecting to use a higher amount of loans, and we see that this amount has been reduced. Thank you.
Thank you, Susana. Minister João Leão.
Thank you for your question. So regarding the first point of the ratification process, we expect all countries by April have ratified the own resource decision, so that the Commission can, before the summer, go to the market and issue to finance the next generation EU. Regarding the second question on the loans and grants issue, today's meeting was not focused on that part, was instead focused on how to foster the recovery, a green and digital recovery that promotes growth across the European Union. A few countries presented their own projects and their plans, detailing how they are going to achieve the green and digital targets, and how to address the social challenge created by the pandemic. Thank you.
Thank you, Minister. Vice President, you can complete.
Yeah, to address a question on loans, part of recovery and resilience facility. Well, indeed, when member states are taking loans, it adds to the level of member states' public debt. That's, I think, quite straightforward, and I don't think that it's in anyone's interest to create some uncertainty about the real level of member states' debt. So that's a clear consequence. At the same time, it must be said that there is a possibility for member states to raise those loans on very favorable terms. So today the Commission presented the borrowing operations, which Commission has done so far under a SURE facility. So the latest issuance under SURE was last month, 7-year bonds with a negative exchange rate, negative interest rate of 0.497%, meaning that on every 105 euros member states are receiving now, they will only have to return 100 euros after 7 years. So clearly this using the loans facilities can help to reduce for member states to reduce their debt servicing costs, which is also a considerable part of the budgetary expenditures. Thank you.
Thank you. Next question to Paula Tama from Politico.
Hello, good morning. Thank you for the floor. My question is for the Executive Vice President. You have said that there are grounds for cautious optimism. In recent days, the Commission has warned EU countries that there probably will be a wave of bankruptcies as the economy is gradually weaned off support and non-viable companies are allowed to fail. I'd like to ask you if the Commission and the Council are going to coordinate among EU countries this weaning of support eventually when the time comes. Thanks.
Thank you, Paula. Vice President?
Yeah, well, first of all, if we look at the European Commission's winter economic forecast, indeed we expect that economic recovery will take place this year in the EU, and it will gradually gain strength over the year. So we expect growth to return on the second quarter and gain strength in the second half of the year as vaccinations are being rolled out, as pressure on public health systems decreases, as also containment restrictive measures can be gradually eased and lifted. At the same time, indeed, we need to see what impact the crisis is still having on the real economy, what impact it's having on European companies. Actually, we had this discussion in yesterday's Eurogroup concerning the questions related to companies' solvencies, because indeed it's true that right now companies have been receiving massive liquidity support, which was important for them to survive the crisis. But it also means that companies' debt levels will increase very substantially, which will be obviously burden on those companies. So we are also looking at the ways how actually support to viable companies can be done through equity or a hybrid investment in companies. And for example, our temporary state aid framework, which is now prolonged till the end of the year, allows also investments, public support in form of equity or hybrid financing to companies, which can help to alleviate these issues. And also the coordinated work is going in a context of our action plan to address non-performing loans, where we're already working closely with the Portuguese presidency. Thank you.
Thank you, Vice President. Next question, Maria Udrescu, please.
Yes, hello. I hope you can hear me. Thank you very much. I had another question on the FATCA issue. What are the next steps? I mean, are we talking about giving a mandate to the Commission to actually take up this point with the US authorities? Or in which context do we expect this to be raised? And how would you see this solved? What are our hopes to solve this issue? Thank you.
Thank you, Maria. Minister, do you want to start?
It's very important to, in the relation with FATCA, to have a system that is, a system that is that we work both ways, not only for the US but also for Europe. But I will ask if the Vice President of the Commission will give more details about this issue. Thank you.
Thank you. Vice President, please.
Yeah, well, on this FATCA, I already mentioned what the Commission is doing from our side. And we also, in a context to address a number of issues which are there with this FATCA, we welcome the initiative of German presidency, which in December last year asked the US Treasury for a meeting, and we stand ready to assist member states in these talks whenever it is needed. But it's worth reminding that FATCA rules are bilateral agreements between US and individual EU member states. Correspondingly, Commission has no formal role in implementation of those agreements as long as member states respect their obligations under the EU treaty. So we are ready to assist, but it's worth keeping in mind that those are bilateral agreements between US and individual member states. Thank you.
Thank you, Vice President. So next question to Verena from DPA.
Yes, I hope you can hear me.
Yes, we can.
Thank you for the question. I'm with the German Press Agency. I have two questions. One is for the Minister, please. on the tax havens list, you said that member states agreed on a new list. Could we know which countries are on that list? And if Turkey is included, and if not, why not? And my second question is to the Vice President. I understood the minister to say that he is expecting ratification of the own resources decision by April, whereas you have said in the past you expected by June. Is there a discrepancy there? And if it is early, could the whole instrument start earlier than we thought? Thank you.
Thank you, Verena. Minister João Leão, please go ahead.
Thank you. Regarding the question of the lists of regarding the question was about Turkey, and you can say that Turkey was not included in the list. We were able to make progress in terms of the cooperation with Turkey on tax matters, so it was not included in the list. Regarding this, the second question is for the Commissioner.
Thank you, Minister. Vice President, please.
First of all, as regards ratification of own resources decision, I think we all agree, Commission, Portuguese presidency, that sooner is better. That's why we urge all member states to finalize the ratification as soon as possible. Well, what I was referring to June is a possible date when a Commission can actually start borrowing operations under the Next Generation EU facility. So, which basically takes into account that now member states can start submitting their recovery and resilience plans. There are 2 months for European Commission to do the assessment of the plans, and for one month for the Council to approve those plans. So if all of this time is used, that actually practically brings us into borrowing operations in June. And the initial idea would be to do the borrowing for 13% pre-financing for member states.
Thank you. We're going to take now the final 2 questions. First, Tommaso Galavotti, please.
Yes, good afternoon. Thank you for taking my question. Tommaso Galavotti in Kronos, Italy. It's a question for the Vice President, if I may. It's about green investments, because, I mean, it is said that the Commission might consider to incentivize member states to do green investments without calculating them in the debt, or applying some kind of discount in the calculation of this kind of debt, which would make sense, because it would push member states to actually make those investments which are important for the green transition. And I know that, I mean, there might be different opinions inside the Commission, but I wonder if you can tell us if you plan a discussion on this issue or if it is out of the question. Thank you.
Thank you, Tommaso. Vice President, please.
On this, well, as we had been discussing before, obviously when member states are accruing more debt, it should be counted as debt, not to create uncertainty also for the markets and doubts in the markets about the real state of play with member states' public debt. So that may in fact be counterproductive. So if we now discuss specifically a recovery and resilience facility and 37% mainstreaming target for green investment, clearly if it's financed by the grants part, it is not adding to member states' debt, because the assistance is coming in form of grants, and only that part which is financed through the loans part is adding to the member states' debt. Well, there is a separate question which will come back, so to say, once the crisis is over, concerning the review of EU fiscal rules, simplification of EU fiscal rules. And indeed, one of the issues which we are looking at is the proposal which has been put forward by the European Fiscal Board on so-called limited golden rule. And once again, the idea here is not to pretend that the debt does not exist, but rather how we interpret this debt for the purposes of EU fiscal rules and for the purposes of Member States' compliance with the Stability and Growth Pact.
Thank you, Vice President. And now for the final question, Angela Mauro, please.
Yes, good afternoon. Angela Mauro of Post Italy. I have two quick questions, if I may. One is about the necessity for member states to distinguish between viable firms and non-viable firms in order to support them from an economical point of view. My question is about the eventual impact of the new variants of the virus. Could this postpone the plan to distinguish between viable and non-viable firms? And the second question is about the economic forecast. As there is more optimism, by the end of the year there will be recovery, even if uneven review. Would you imagine an end of the general escape clause starting from next year already? So a reactivation of the Growth and Stability Pact? Thank you.
Thank you. Minister João Leão, do you want to start, please?
Regarding the second question, as the Vice President has already said, we are going to later on to discuss the application of the application of the suspension of the state of the escape clause for the next year. Is something that we're going to address before the summer, so every government and every ministers can prepare their budget plans for next year. The second question, I will leave for the Commissioner, if it's possible.
Thank you, Minister. Vice President, please go ahead.
Yeah, on general escape clause, as Minister already said, and as Commission has outlined on numerous occasions, so we intend to take the decisions concerning general escape clause in a spring spring European semester cycle based on the spring economic forecast and available fiscal data at that moment. However, we intend also in early March to come with certain guidance to member states reflecting the Commission's interpretation of general escape clause and conditions for its reactivation. And also guidance on fiscal support measures and gradual phase out of fiscal support measures as economic recovery takes hold. And on the second question on viable companies, well, as it's currently being interpreted in a temporary state aid framework, European Commission considers viable companies those companies which were viable prior to COVID-19 crisis, so not taking into account impact of COVID-19 as it's a temporary and external factor, and so to say does not reflect on the underlying strengths of the company. Thank you.
Thank you, Vice President. Thank you for your presence. Thank you, Minister João Leão in Lisbon. Thank you all for joining us, and see you soon. Have a nice day.